Time to fuel your business success. Welcome to Harmonious at Lunch. We're bringing you bite-sized advice and expert conversations to drive clarity and growth 5 days a week. Make sure you join our Facebook group at humanoff.com/lunch, where listeners like you and our guests hang out so we can find harmony in business together. If you're building a business, you're in the right place. Let's dive in.
Welcome back into some more bite-sized business advice. Today's episode is a follow-up to yesterday's. Yesterday, we told you how to make money. Today, we're going to tell you how to keep the money. That's the most important part of business. We're talking tax saving strategies for small business owners. I have a very special guest with me, Mike Jesowshek. Welcome to the show, and thank you for being here.
Yeah, Brandon, thanks for having me. And, it's a funny comment that you brought up there, because I oftentimes tell people that, when you go into a business, you could spend money on advertising, and that might grow your business. And I think that people should be doing that. But when you talk about tax savings, it's guaranteed results. So like advertising, you could put a bunch of money towards advertising, but you're not guaranteed to bring leads in. Where you implement a tax strategy, you're guaranteed to save on taxes. And I think it's just an area that so many business owners kind of miss out on.
Yeah, it's probably because we hate paying them, right? I mean, I've never met anyone that enjoys paying taxes to the government. But it's one of those necessary evils. And if we could lower that burden, then why don't we all take advantage of that? So, why don't we dive in there? You're a CPA. You're either everyone's best friend or someone's worst enemy, depending on how well they planned throughout the year. So this episode is going to air in the middle of July. Someone's hearing this live. What should we be doing now? Because tax season is not April 15th. It's actually the whole year. So what do we need to understand as business owners so that we're not writing big fat checks next year?
Yeah, I mean, the biggest thing is exactly what you mentioned. When we talk about taxes, or when I want to talk to business owners and they hear the word tax, I want them to think about tax planning first, because that's ultimately what comes first. As you kind of mentioned, tax filing, tax preparation, tax filing, that happens in April. That's just taking information from last year, putting it up into a document and saying, government, here's what happened last year. Here's my information, and that's it. Tax planning is the fact of what are we doing throughout the year to make sure that bill in tax season, April 15th, is as low as humanly possible. And so that is the work that we do here. And if you're in July, plenty of time to continue to learn strategies and then implement strategies. And I always say, tax planning is about learning. So we want people to learn what strategies are available to them, but it can't stop at learning, because that doesn't produce any results. So it's taking that and then doing a correct implementation of those strategies. Because a lot of times people hear about a strategy and they just get a little piece. They see a 60-second TikTok video and they're like, okay, I'm going to go implement that. But there's probably more to it. And so it's learning it and then correct implementation. And what I always say is, the government put these laws into place for a reason. So a lot of people think tax planning is like cheating the government, because you're lowering your tax bill and they feel like they're cheating the government if they lower the tax bill. And that's not the case. The government wants us to utilize these. These were put into place for a reason. And typically it comes from an incentive. The government wants something that they can't produce themselves. So how do they get people to do it? They offer a tax incentive to the citizens so that the citizens can go do it. And so, for example, the government wants affordable housing. How do they get affordable housing? They encourage people to build or rent out affordable housing. And so they offer tax incentives for that. Or the government wants people to be hiring employees. They want a growing economy. So how do they do that? They offer incentives to business owners to do certain things, to be a business owner, tax incentives that they can utilize. But the thing is, the government doesn't put these on billboards. The government doesn't tell you if you're not utilizing it. It's your responsibility to understand, okay, what is in this crazy, deep, detailed, confusing IRS code? And then how do we put that into practice? And that's what kind of that understanding what tax planning is. And this isn't rocket science. This isn't crazy stuff, crazy strategies, like secret strategies that nobody's ever heard of. This is stuff that's readily available in the tax code, but it's just understanding it and then actually implementing it correctly. Because we can take a strategy that's black and white legal in the tax code, and we can make it illegal just by not implementing it correctly. So that's key piece too, is understanding what do I need to make sure I do correctly if I am implementing this. So if the IRS ever does come knocking, we provide them our documentation and they say, great, good to go.
Yeah. And well, it's not that it's readily available, because it's not. it's black and white in the code, but like you said, you have to be educated. Like you have to go and find it. Which something else popped in my head. Have you ever seen those memes on the internet where it's like the government's just sitting back, like, you owe me taxes, and the person's like, how much do I owe? And they say, you tell me. But if you get it wrong, I'm going to throw you in jail. It's like, okay, this system's a little weird, but we have to play within the rules, and we can make it work for ourselves. So that being said, what are some of the strategies? The tax code is enormous. What are some of the strategies that you find yourself coming back to over and over for your clients that a lot of people just maybe tend to miss or not know about?
Yeah, the biggest thing is when I talk tax strategies, I break them into two different types of buckets. And so I have what I call core tax strategies. These are strategies that whether you're making $10,000 or $1 million a year, these are strategies that work for you. They're easy to understand, easy to implement, fairly risk-free as long as you're just dotting your I's, crossing your T's, doing some of the basic things. And so those are core strategies. And then I have what I call advanced strategies. Advanced strategies, a little bit more complex, typically involve an investment or putting money to something in some way and getting a tax advantage from that. A little bit more complex, a little bit harder to understand, but can provide some massive tax savings. And so those are typically going to be reserved for those making $300,000, $400,000, $500,000 or more per year and on a profit type basis. And so when I look at core tax strategies, there's different areas that we can go down, but one of the main concepts, it's not a strategy, but it's a concept that I want business owners to understand, is this concept of after-tax versus pre-tax spending. And so most people that are, say you're a W-2 worker, you get your gross wages and you have all these taxes taken out, and then you get your take-home pay. And any spending that you do with that take-home pay is money that's already been taxed. So you're not getting any tax advantage from that spending. But if we flip the switch and look at it from a business owner's perspective, we have sales or revenue, and we have all these expenses that go into our business, and then we come to our profit, and we're taxed on the profit in our business. So any spending that we do inside of our business is considered pre-tax spending. That's spending that's done prior to those funds being taxed, and you get a tax advantage for that. And so that's the great benefit of being a business owner, is we have the ability to get a tax deduction prior to our money being taxed. And so our goal should be, how do we not go out and buy a new piece of equipment that we don't really need, or go buy a vehicle at the end of the year that we don't really need? That's not tax planning. That's just getting a discount on something that you don't need. Instead, we're saying, how can we look at the spending that you're already doing, but you're using after-tax dollars for it, and how do we turn it into pre-tax spending? How do we find a business purpose for that spending and move it from after-tax spending into pre-tax spending? And one concept that kind of I use as a really easy example to start to dive into this is the concept of a home office. If you live in a home, everyone lives in a home, right? If you're a business owner, you're probably living in a home, whether you rent or you own. You're paying rent, you're paying your mortgage, whatever it might be. And whether you own a business or not, those are expenses that you're going to pay. It has nothing to do with your business. But now that you're a business owner and we declare that you have a home office, now we're taking a portion of those expenses that you are going to pay anyways, and typically would be after-tax spending. We're taking a portion of those and we're moving them to pre-tax spending. And that's just one example of that benefit. We could look at hiring your kids. I think anybody with kids age 7 and up should be hiring their kids in some capacity in their business. And, as a father, we know we're always supporting our kids. We're always spending money on different things, whether it's basketball camps, baseball camps, volleyball camps. They're going to amusement parks with friends, whatever it might be. We're always spending money on our kids. But how do we move that from after-tax spending into pre-tax spending? Well, maybe there's something our kid can be doing in our business. And, it's not going to be $15,000, $20,000, $30,000, but maybe it's $1,000. Maybe it's $5,000, whatever it might be. Is there something that our kid can be doing inside of our business that can help our business, but also teach them a lesson, teach them this concept of earning money, and then also moving that spending, that basketball camp that we do, now we get a business deduction for it because we're hiring our kids in our business. And so that's kind of a concept and this idea of what I call maximizing deductions, moving things from after-tax spending into pre-tax spending that can really impact things. And we're not creating expenses that we don't need. We're not buying things we don't need. We're simply shifting where we're paying for certain items from.
Yeah, I love that mindset shift, and I do want to dive in there because I think that's important. I want quick clarification. You can hire your kids as soon as the age of 7. Is that what I heard you say?
So you could hire them. younger, we have tax court law cases that support 7 and older, no problem. If we go younger, we just have to be a little bit more meticulous with what we're hiring them for. So, most common cases is modeling. And we have clients all across the board that, they put their kids on social media, maybe they're on billboards and they use their kids that way. But there's not a ton of opportunity for that shift until they start to get to the age of 7. So, if you have a baby that you're modeling, maybe $1,000. I don't know what a typical, what a typical modeling cost is right now for a baby, but that's just an example of just one shift that they might be able to do.
Yeah, my kids are adorable, so the rate has got to be higher than that. I mean,
I agree.
Comes with the territory.
I would pay my kids $10,000, but that's just the piece where it's like, okay, when we talk about hiring our kids, they need to be doing actual work for us. So they actually need to be doing work for us, and we need to be paying them a reasonable rate for the work that they're doing and the experience that they have. So when you look at a modeling instance, what would you have to pay somebody else's kid to do it for you? If you didn't have a child, what would you pay somebody else's kid to take a few pictures, maybe put it on, maybe do a video promo for your business, whatever it might be? What would you pay them? And that gives us kind of an idea of what a reasonable rate would be. And we just need to document that. We need to say, okay, here's what we're basing this reasonable rate off of. It's not just something we pulled out of the thin air. It's something we have kind of a hardcore number of here's what a typical hourly rate or a session rate or whatever it would be for modeling, and using that information for that. The other thing with hiring our kids is I get so many people that say, maybe I'm a solo attorney. I have one other attorney working with me. All of my business is from referrals. I don't do social media. We're an old school firm. What could my kid possibly do in my business? And that's what I get from a lot of people. And I always think I have yet to find a business that I couldn't find something that the child could do. Again, it might not be $10,000 a year that we're paying them, but there's always something that we can find. It's just thinking outside the box a little bit. So that attorney that says, I don't do social media, what would it hurt if they did start to do social media? If they did some social media, is it going to hurt? Like, it's not going to hurt their business. Sure, they might not need it. It might not help their business in the way that they'd expect, but it's not going to hurt it. And we know that that's spending. They're going to be spending things on their child either way. So why not utilize it as, hey, it might help our business too, but we're also getting a really good tax benefit from it as well. And then I like to say combo strategies together is saying, okay, now that we're hiring our kids, maybe we fund a Roth IRA because now they have earned income. We could fund a Roth IRA with that money and create a retirement egg really young, and also create an emergency fund because Roth IRAs are nice. You can withdraw the principal from it. So I kind of look at that as like a secondary college saving funds for our kid. The downside with the Roth IRA is you don't get a tax deduction when you go put money into it, but you get tax-free growth, tax-free withdrawals. Well, if our child is making $10,000 a year for working in our business, that money's not taxable. They're under the standard deduction, so they're paying no tax on that. So getting a tax deduction going in doesn't even matter to them. So that downside of a traditional IRA or downside of a Roth IRA completely is eliminated, and it's all upsides. And so what I like to do is say, hey, maybe we fund this $5,000 for 5 years. That's $25,000 that's sitting in there that's going to grow till the age of 65, whatever it might be when they start to access those funds. It's going to grow tax-free and tax-free withdrawals. Like, think about how powerful that can be. But what happens if they hit something where they need some cash? They're in college, they need some cash, and you don't want to support it. You don't want to put money in there. Well, they can withdraw the principal from that. No penalties, no tax, no interest, no questions asked. They can withdraw that principal, that $20,000 or $25,000 we put in there. They can withdraw that tax-free. So it really is kind of a planning tool. We say, okay, here's one strategy. What can we put on top of it now that we're doing that strategy that can be super powerful too?
Yeah, which kind of brings me back to that other question of, you talked about the mindset shift of pre-tax versus post-tax spending and how to just understand that for your business. Because you see it on social media all the time. It's like, look, I bought this car that I don't need just to save money. You're not really saving money. You're just spending it on something else. But what are the other mindset shifts that are really, really important to make in this context of tax savings? The one I heard you just say was adopting a long-term philosophy of investing in your kids and their future and your future as well. But I think so many business owners get caught up in the day-to-day. We're working, in our businesses, so to speak, and we forget that life will exist outside of this business, but also for many, many years. So how do you help people take the long-term view too? And what are some of the things that we need to pay attention to in that regard?
Yeah, when we first started, I kind of talked about this concept of tax planning can guarantee results. And and people hear that and they're like, okay, that makes sense. But so many people don't do it. And so why is that? What is the reason for doing that? And I think it's because they think that the obstacle to do it is so hard. And then they also think of this concept of, if I am not paying as much in taxes due to things that I'm doing, that's cheating the government, and I need to worry about that. So we try to step back from that a little bit and say, we talked about the not cheating the government. These are incentives put into place. We need to do them correctly. But when we talk about this concept of when we look at tax planning, we want to always be thinking about, what is it that we want to implement? What is it that can be done? Take one step at a time. Do one strategy at a time. We don't have to take 10 different strategies and implement them all at one time. Do one strategy at a time. And the problem that I see a lot of small business owners have is they don't know where to start. They talk to their accountant. They say, I want to hire my kids. And their accountant says, well, I need to know all this information. Like, I need this, this, and this. Or they say, how do I hire my kids? And the accountant says, well, it depends. There's a lot of things that need to go into. You got to do it right. And they get demotivated. They hear that and they walk the other way. Listen, that sounds like too much work. It's in everything there. And so one thing that I've always done, and I was a business owner myself before I even got into tax, and I was facing these same issues, and I was facing those kind of obstacles where I'm hitting someone saying, sounds like too much work. I'm just going to go continue to make money. And one thing that once I started to research into tax strategy, I started to realize that, yes, tax strategy, it does depend. And everyone's situation is going to be different. So if that guy's doing this, doesn't mean that we can do that. Everyone's situation is going to be different. But 90% of the strategy, it doesn't depend. If we look at hiring our kids, what you need to know about hiring your kids, how do you do it correctly? How do you correctly implement it? What are the things you need to be careful about? What are the ages? What are the things that they can do? That's the same for everybody. So 90% of a strategy is the same for everybody, and it's that last 10% that we tweak. So if you're a plumber and somebody else is a coach, how they hire their kids is definitely going to look different. The plumber's not going to be hiring the kids in the same way that maybe the online coach might be. But the concept, the steps, the rules, the things that they need to do to do it correctly is the same. And so that has been my passion ever since I kind of started to understand that, started to research this stuff, has been my passion to say, how do I get people to that 90% of the way there so that they can go to their accountant and not say, how do I hire my kids in my business, but rather, here are some of the things my kids are going to be doing. Here's some rates. Here's where I figured out how to pay them. Can you just help me tweak this? Can you help me make sure that I'm dot my I's, cross my T's, I'm doing everything correctly here? And the accountant's going to be like, yeah, let me help you with that. Instead of saying, well, it depends and there's all these different things you need to do, they're coming to the table with that 90% and just asking for help on that last 10%. And so that's been my mission with small business owners for the last 8 years is, how do I get free information out there so people can get 90% of the way there and then figure out that last 10%, whether they do it themselves or whether they're talking to their accountant for that last 10%. But how do we take these strategies and get them that far?
That's an interesting answer to that question, because if you filter that through and kind of boil it down to the essence, you're saying that even though you're hiring professionals, you need to at least know enough to guide them. Because let's take it out of accounting. Let's go to a lawyer, right? If I go to my lawyer and I ask him, hey, how do I get out of this situation? I'm going to get it depends. And I'm going to get a lot of questions. If I do my research and I get the 90% and I say, here's what I found based on the situation, can you guide me based on that? The answer is going to be yes. So I really like that. And I think a lot of business owners, I love that you're taking this education approach, because a lot of business owners stay away from taxes and we go back in our turtle shell, right? So if nothing else from this episode, that's really my takeaway is get involved, know enough to be dangerous, but then please hand it off to someone so you're not dangerous.
Yeah.
Get a much better result.
Yeah. Some people come to us and they say, well, I want done for you. Like, I just want you just save the taxes for me. I don't want to touch it. I don't want anything to do with it. And I say to them, well, that would be tax fraud. I can't just on paper hire your children, pay them $15,000 up to the max where it's not taxable, pay them their $15,000, and your children, go and start their Roth and do all that without ever doing anything in your business. I can't do that for you. Now, I can do it with you. I can help you along that way. I can give you ideas, concepts. I can start to do the process, the legwork of what we need to do and track all that. But I can't do it for you. And so that's a key thing, is that you need to have, when it comes to tax strategy, you need to have a general concept of what you're implementing. You need to understand, at least from a small context. I'm not asking business owners to be tax experts, and they don't want to, and I wouldn't want them to be. But I want them to at least have the core understanding of these strategies, so that when they're implementing them, they're making sense to them. They're understanding what it is. So enough that if somebody comes to you and says, what is this strategy? Maybe it's an S corporation. They say, why are you an S corporation? Even if it's as simple as answer is, I'm an S corporation because I want to pay less. I pay less in self-employment taxes than I did when I was not an S corporation. That's enough to know. That's enough for them to understand that strategy to some extent. The problem is if people come to them, they say, why are you an S corporation? They say, I don't know. That's what my accountant told me to do, and so I did it. And so it's understand that core concept. It's not, I don't want anyone to be tax experts, but understanding from a high level what they're implementing will make this tax planning, these strategies, the savings go so much further.
Yeah, I love it. So that begs the question, where can people get more of this tax education? I hear you have a couple of resources for them.
Yeah, so you can find us at taxsavingspodcast.com. We have a podcast. We do weekly episodes on there. We just published a book in January, which I call a Small Business Tax Savings Handbook. Go through a lot of the core understandings of these core tax strategies. And then those for looking for a little bit more hand-holding, more of a done-with-you type service, we have a software called TaxElm. That's TaxElm.com that they can check out as well.
Beautiful. Mike, thanks so much for stopping by. This was a great episode.
Yeah, Brandon, thanks for having me.
For those of you watching, listening, if you want those resources, if you want to connect with Mike, social media links, all that fun stuff, and the podcast down below in the show notes, go check that out. Get yourself educated, because it really is important. I hope you take that, if nothing else, away from this episode. We'll see you on tomorrow's episode of Harmonious at Lunch. Thanks for being here.
Another episode of Harmonious at Lunch in the books. I hope this episode made you think and you grabbed some actionable ideas to propel your business. Don't forget to like, comment your takeaways, and subscribe wherever you're listening so we can help more entrepreneurs just like you achieve harmony in their life and business. For cutting-edge tools that bring clarity